Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is where we get everything you need to know in 90 seconds at 9 o'clock. With news, we seem to be moving to an endgame of sorts in the China-US trade row. China's commented for the first time on the American moves to raise tariffs sharply on Chinese goods. It said it will take necessary countermeasures. Meanwhile, April data shows Chinese exports fell 3.7% and imports rose 4%, narrowing their trade surplus to $21 billion, which is about half of what it was the same month a year ago. But their sensitive surplus with the US edged higher as China brought far fewer American goods and the Americans keep buying Chinese goods. But trade is under pressure everywhere. Yesterday we reported the vanishing of global air freight growth and the reduction in the Asia-Pacific region. Today, March data for passenger travel reveals the softest growth in 9 years, slowing to just 3.1% year on year. In the Asia-Pacific region, international travel grew just 2%. Aussie domestic traffic levels fell more than 3%. All these changes represent fast fallbacks. In Canada, housing starts reportedly jumped unexpectedly, up 23% in April from March and far above analysts' estimates. In Australia, the lawyers are out in force at their major regulators. Senior officials at ASIC and APRA have said the effects of climate change no longer represent merely ethical issues for Australian businesses, but must be considered a major financial risk. In fact, they've laid a legal trap of saying the long-term risks posed by climate change are legally material, foreseeable and actionable now, and therefore companies, their boards and individual directors will have liabilities if they don't act now. But these regulators shied away from saying what should be done. US Treasury 10-year yield is now at 2.49%, and that's 4 basis points higher in trading today so far. And locally, market reaction to yesterday's RBNZ rate cut has been remarkably modest. Gold is down $5 to $1,280 an ounce. US oil prices have recovered slightly today after yesterday's sharp fall to just over $62 a barrel, while the Brent benchmark is just over $70 a barrel. And the Kiwi dollar will start today at 65.7 US cents, and actually very little change from this time yesterday before the RBNZ rate cut. On the cross rates, we're at a touch lower at 94 Aussie cents, and against the euro, we're at 58.8 euro cents. That puts the TWI down marginally to 70.5. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.